If Russia story stays around, you better be selling everything euro dollar and Aussie dollar. However, if this story goes away, guys, which it might actually, you better be buying dollar yen and dollar Swiss. So guys, is the US dollar going to the moon? Now with equities going south and 2 and 10-year yields flying high along with oil, and of course we've got a massive 50 basis point rate hike coming from the Fed. Yes guys, it's time to back the dollar. And that goes for all traders out there as well as traders from other markets. Get ready for a lot of dollar strength. So what are the headlines? Well, we have two of them. Number one, the Fed are chasing a massive 50 basis point rate hike, now potentially in the next few weeks. Number two, Russia and Ukraine tensions are potentially going to break the market. So let's start with the Fed and the dollar. So the dollar, as you guys know, is the world's reserve currency. Everything is made up of it. Now, before predicting where the price will go, let's talk about the driving factors for a second behind the dollar. So this involves the Fed. Now, they need to control two things, and they are the following. Number one is, of course, inflation, which is the general cost of goods and services of an average person. And number two, of course, really important, is employment. Because think about it, guys. If the employment across the whole country is getting higher, which means more money is being earned, which means more money is now being spent back onto the economy. So I personally think out of those two, the most important thing is jobs. Now that makes up the Fed's mandate, stable prices and maximum employment. So let's look further into this again. Inflation, guys, in the States had just come out last week at 7%. That's right, 7% is insane. This is actually a 42-year high. That's right, the last time we saw inflation this high was back in the 1980s. Now, this is very worrying for the average American because the yearly wage increased year by year, which is about 4.8%. So technically, you got a pay cut, not a pay rise. Now, unemployment is steady around the 3.9% mark, which is edging closer to the all-important target of 3.5%. So now this may seem like a lot of information, but in order for the Federal Reserve to control the outburst of inflation, they got to raise rates. And as it currently stands, they are scheduled to do a rate hike as early as March this year. So naturally, the optimism around that is now being priced into the dollar, hence why I see a rally for the past few days now. 50 basis points coming from the Fed is a massive increase of 0.5%. So any change to that, guys, would directly impact the dollar. And we're actually looking at 4 rate hikes in the whole of 2022. So this could be a lot further upside for a lot of dollar rallies. So guys, looking at all important 10-year yields screaming higher, we need to remember there is an important 2% gamma level, which if we crack that, we're going to see a lot of unwinding within treasuries. The second story is really important with what's going on in Russia right now. And that, of course, is going to have a direct impact to our G10 pairs. Now, let me actually break this down. What's happening out there? Well, at first, I actually feel the media are actually hiding this story a little bit, as big as it is. But Russia is literally about to invade Ukraine. And yes, this is going to be massive for all markets. That's right, all of them. Russia is on what I call a rampage. So there's actually been a massive back and forth for the past 7 years now between Russia and Ukraine. And Russia just basically doesn't want to let it go. Picture Britain leaving the EU for 7 years. Now, they've actually invaded back in 2014, where over 14,000 Ukrainian people actually died. And now they're actually putting the pressure back on. Russia will not stop until Ukraine is under its influence. And there's been many threats going on and many attacks on the verge. Now, just last week, there was actually a cyber attack, I believe, on the Ukraine citizens. And there's currently over 100,000, I think it's more than that now, 120,000 Russian troops on the border. Basically, if this thing kicks off, you will see all markets being affected. If Russia story stays around, you better be selling everything euro dollar and Aussie dollar. However, if this story goes away, guys, which it might actually, you better be buying dollar yen and dollar Swiss. Now, let me actually explain to you in the charts why. So let's start off with dollar index. Now, dollar index, I love looking at it, even though most people don't actually realize it's actually mostly made up of Euro USD, a little bit of cable and a little bit of dollar yen as well. But it can be very good to look at now. As you guys can see here, these were actually 2-year highs on dollar index back at 96.90. Now, from that moment, you can see here, if I go on a 4-hour time, for example, we had a lot of consolidation. It stuck around that 96 level, which is quite important. But then after that, we had a little bit of downwards movement. Now, this was actually based on the Fed actually coming out and talking about future generations having low interest rates. So that was a little move that happened there. But then again, this whole narrative about 50 basis point talks in March has now come back into the market. And as you can see, it's being priced in. So we've had movement push back up to the upside. Now, what I'm looking at here is this 95.85 level. That's the most important level for me right now on this. A breach of this, you will see a lot of dollar strength come back. So that's dollar index, guys. It's something nice to keep your eye on. So definitely look for this level to be broken before we get further dollar movement. Now next, I'll go to a canary. Now I don't normally look at dollar ruble. I only look at it as part of my emerging market setups that I've actually got. Now what you can see here is on a 4 hour, I do have a nice little trend line to the upside. But guys, this is all because of the geopolitical problems is what I'm watching this. As I actually make this video right now, I actually got a notification that things in Russia and Ukraine are even right now while I'm making this video getting worse. So what we're going to look at right now is seeing, and also another thing to mention as well is yesterday, the Russian stock market actually took a bit of a hit as well. So any volatility on this pair, and you're going to see it truly represent what's going on in the real world right now. So I'm keeping a close eye on this. Let's see if it can break above 77 onwards, and you're going to see everything really play out and how importantly this can actually affect the markets. Now, before I hopped on the charts, I actually talked about how this can directly affect yen and Swiss as well. Now, the reason it's going to do that is because whenever there's a geopolitical problem going in the world, people like going to safe havens. Now, there's two popular safe havens, yen being one of them. But people actually don't realize yen is more of a lender. It's a weak currency pair, and people don't actually really like to have it, but they like it because it's cheap. The second one they actually love and prefer is a Swiss franc. Now that is a real safe haven. So what you can actually see is if there's anything that happens here, you're going to see both the safe havens fly. However, if this story goes away, you're going to see true dollar strength come back into the markets. And now I'm going to hop into Euro USD, as you guys will probably see a little bit further into this. So Euro USD, as you can see, we made some significant lows down here. Then after that, we were trapped in quite a few channels that I've actually got drawn on, and it stuck to channels quite well. And as you guys can see, price came up on, let's go to a 4 hour time frame. Now, one of the things to actually mention, of course, Euro USD can often be consolidating for long periods of time. And I believe it's going to hop back into consolidation now for, again, maybe a long period of time. But the major level on this was 1.138. As you guys can see, the price action remained below this level. And when it did break above and it tried to make a run for the upside, this is again where that 50 basis point Fed talk has come back into the markets. Now, this was quite an easy trade because the moment it broke this, I think it shot down 100 pips or so. Now, I actually believe this thing's actually going to keep on falling further downwards. My next level target will be 1.127, but again, it actually does have a good potential to even take out these lows. This is all a massive dollar story. This is not a euro story. It's all about the dollar. So again, talking about that real dollar narrative, guys, keep your eyes on this. And for me, I'm looking at this thing potentially pushing back to the downside. You might get a bit of retrace, but this 1.13 level is very, very important. Next up, I'll go to dollar yen. Now, dollar yen actually made some significant highs as well. I believe it was 5-year highs on dollar yen. I'll zoom out a little bit to actually show you those highs. So, yep. And there's a very, very strong level of resistance, which I've always looked at, which is between 114 and 115. And I've even got a nice trend line going to the downside as well, which actually looks like it's respecting pretty well. Now, the reason yen actually fell off was because both equities actually were quite soft and took a hit as well, taking yen crosses with it. So what I'm looking at right now is, with everything actually happening, especially the Bank of China, they're talking about a lot of tightening happening out there. So of course, if they tighten, this could actually make the yen a little bit stronger, causing this to fall further downwards. So I've got a few downside targets. But again, guys, I mentioned it one more time. If this real dollar comes back and you see this Russian story not really go ahead and this war be avoided, you're going to see a massive break of this level. And then you're going to see, because of the fundamental macro push, which really moves the markets, you're going to see this level broken to the upside. Now, I'll show you something pretty interesting. This is a little golden nugget I'll actually give you guys. Is if you look at oil, and I was literally talking with Marco about this a little while ago, oil is on a rampage to the upside. Now, if there's a strong oil, as you can see, oil's very, very firm, then you could look at potential pair like USD CAD. And I'll actually give you guys an interesting way to actually combine all this information together, and I'll show you a potential trade setup. If you look at USD CAD and actually zoom out, you've actually got an incredible trend line set up here, and mixed with a very, very nice key level and a fib. But what's going to happen is, guys, you've got a strong Canadian dollar as well. Some of the metrics and some of the data coming out for Canadian dollar is looking a little bit better, if not than the US. Canada is a really good place right now. So even though this looks like a great opportunity, you've got a strong dollar, which might be for a while, but at the same time, you've got a strong CAD. So what you could do is be quite smart and go to a nice little CAD cross. So for example, you can go to Aussie CAD. So if you look at the strength that can actually be carried from Aussie dollar, and you can take that Aussie as being fairly weak because of that, and then you've got Canadian strength. So then you look at a cross like this, which is Aussie CAD. And I personally think that this thing could actually easily push further down, and this could be quite a good trade setup. But keep your eyes on this, guys. This will show you some nice Canadian strength coming through. But yeah, that's it, guys. I thought I'd make a little video, guys, showing you what's going on in the world right now, because it's actually quite an interesting time. I want to do more macro videos for you guys, and this is actually going to help you keep your eye on the markets and show you by what's happening in the world, how it's going to directly impact your trading. So guys, trade safe, and I hope you enjoyed the video.